Hi, this is Michael Allen Sell with Eustace Mortgage. I'm a licensed loan officer, and this is part 3. What happens when you're pre-approved? So here we go. You are pre-approved. I've gotten you and your realtor a letter stating this is what your max is, meaning anything above it works. You just can't go above it. Now, that does mean that options are typically out there to maybe pay off some credit cards, loan, whatever. You reduce a debt, you open up more buying power. So that is on the table too. But generally what happens? So now realtor puts you on a search based on area, zip code, how many bed and bath, all those kind of things that you're looking for. Through a lot of this part of the process, I fall back. I check in, but I fall back. Other than to give you a sense of what the note will be at certain price points, one, and then two, based on flood zone, to let you know how that might change the note, okay? How that's key in our area is this. We have two main flood zones, X and AE. A is in Apple, E is in Every. For an X flood zone, the insurance should still get it, but it's not required. It's not part of the note for that reason. You just pay an annual amount to the broker, they deal with FEMA, and there you go. Take care of it once a year. If it's AE, then instead, we want to know how much the seller is paying for the flood insurance, because you can actually assume their policy. And that's key because it's usually going to be lower than a brand new policy. And also, it lets us know how much that's going to take the note up. So when I do a pre-approval, I'm basing that on X flood zone. If we're introducing something else to it, so flood insurance, then I find out what the premium is from the seller, divide that by 12, and that tells me what the monthly amount is. That's going to be important. Okay? At a certain point then, you with your realtor will find a property. This is a listing that, hey, I want to make an offer on this. And in doing so, the realtor will draw up a contract. Are we going to ask them to cover all your closing costs? Are there other offers? So we need a more aggressive offer, not asking for that, all those kind of things. These are the type of things that I've communicated with you and your realtor before you're even home shopping to know, hey, do we need closing costs to make this work? Would we like those, but we don't necessarily need that? You know, all those things. So a lot of times the realtor then will check in and say, hey, what's the percentage? Because we ask for typically a percentage rather than an amount. What's the percentage that we're asking for? Meaning, what am I estimating all this to be? That's why the tax premium or tax bill is important, and the insurance premium is important as well, especially if we also have flood insurance on that. So then you make an offer, hey, it's accepted. Or they counter it, meaning they say, well, you wanted a lower sales price. We'll do this, but we want to go back up a little bit. We don't want to cover all that for closing costs, any of those kind of things. Then you can decide, okay, I'm either going to accept that, or I'm going to say, no, this is my final and firm offer, and that's what I'm sticking with. That will be either one and done or X amount of hours for that to go back and forth a little bit. At a certain point, though, ideally, you go under contract. When that happens, meaning you've already signed the contract, you provide what's called an earnest money deposit, an EMD. That's basically just a portion of your down payment that you're paying up front, that you get prorated to get credit for on the back end. So you pay that up front, and then guess what? Here we go. This is all really happening, right? This whole process then to come takes about 3 to 4 weeks on average. That's a pretty safe bet. For the sake of budgeting purposes, know that the month that you close in, you don't have a house note due until 2 months after that. So meaning if you close in May, your first note is not due until July 1st. That's because you're always paying in arrears. When you rent, you're paying in advance. When you're paying a mortgage, you're paying in arrears. So July is paying for June, but what about May? We'll get to that eventually for closing, but know that part of your closing funds collected would be interest to take care of the rest of the month after you close at that point. So what else? You go under contract. What happens next, right? This is a big thing. Well, guess what? Everybody on your team does this all day, knows what to do. So you just settle in and say, okay, what happens, right? Inspections. So what you're going to do is with your realtor, you will find an inspection company to come out as soon as they can. And they're at the very least, they're going to make sure foundation, roof, no termite issues, the big things like that, right? If they can look into electrical plumbing by video pipe. So how much does that cost? I would say on the low end, probably, let's say, sub $500. If you have video pipe and everything else, that's probably going to take that from 500 up closer to 1,000, something like that. That's an amount that's needed, it's necessary, but you're not credited for that on the back end when you're ready to close. Okay. Simultaneous to this, what happens is in my office, my assistant is getting any updated docs. Do we need updated 1 month of pay stubs? Is there anything else that we were waiting on that we need? A W-2, any of those kind of things. So we're getting the file together all ready for the underwriter. So I pre-approved you up front, but the underwriter ultimately has to sign off on it. This is somebody in-house with Eustace. Also, behind the scenes, we're doing a lot. We're checking tax transcripts. We're making sure there's no other real estate owned. The title company is making sure there are no liens and judgments with you or the seller. All those things are happening that mostly you don't even hear about. You're just kind of going through the process. The big thing is inspection period. That's usually a 10-day, typically 10-day kind of thing, meaning that you do inspections, you respond to the seller saying, hey, this is what we saw. Do we want this and this to be taken care of? How do they respond to that? Same as your negotiation when you're going under contract. They can agree, they can counter, you go back and forth. Now, during the inspection period, that's only the second time through the transaction where either party can step away without any legal recourse. The first part is when you're in negotiation before you go under contract. But the inspection period is the other part. If you walk away or they walk away, you still get your deposit back. After the inspection period, everything is very legal. And if you decide to walk away from the deal, you lose your deposit, or plan on that anyway. What happens after that is appraisal. Appraisal means that we are determining what the value is of the property, and also are there any repairs that are required per on an FHA loan HUD, or on a conventional loan Fannie Mae or Freddie Mac, on a VA loan the VA, and on down the line for each of those loans. Each of those is similar but a little different. Conventional is more value focused and less condition focused. FHA and the government loans for consumer protection are value but more so condition. There's some things that they're particular on that. While all that's happening, we are at least one time your file has gone through underwriting to have them sign off on your part of it. So why? So when the appraisal comes back, when any of the title work from the title company comes back, meaning they're making sure no liens and judgments, they're making sure it's a clean property, no one else can lay claim to the property. They're making sure, does this need a survey? Is there anything that could be an issue down the line, and is everything clean at this point? They're also the people that administer the closing when we're ready to go. So ideally, when the appraisal comes back, everything else is ready to go, so we can submit it to the underwriter for what's big in this business is called clear to close. Clear to close means the underwriter has reviewed everything. We're good to close. We just need to schedule and make it happen. So those are going to be some of the key elements that happen through this process. Again, this is about 3 to 4 weeks. I know it's been a lot of information. I know I've spoken quickly, but I wanted to try to get this in under 10 minutes to give you a sense in a nutshell of a homebuyer 101 of how all this happens. So for number 4, which will be coming up, I'll be talking about actual closing itself. What happens to prepare for closing, what happens at closing, and then what happens right after closing.